All right, welcome to the Nadex Application and Strategy webinar series. My name is Daryl Martin. I'm with ApexInvesting.com. I'm a trader just like you are. And, what we're going to do is we're going to talk about trading on the news. We're going to talk about a specific news event today. And I encourage everybody to ask questions as they come up. Let me know what questions that you have, and I'll try to answer all of them on the webinar. The ones I don't answer, usually because we run out of time. So post them now. I may not answer them in the order that you ask. You may post it maybe a little bit because I want to make sure we're staying on track. But I will come back and answer it. So don't give up. Don't leave. Give me a chance to answer your question. I'll be more than happy to answer it for you. Okay? Before we get started on any webinar, normal thing that we got to do is throw some disclosures up there. This is information from Apex Investing. It's unique to Apex. Make sure you know what you're doing before you do it. Trading involves risk, and it's your responsibility to make your own decisions, etc., etc. Okay? And then the other standard disclosure, futures and options and swaps trading involve risk, may not be suitable for every investor, may result in a financial loss. This is not a solicitation to buy or sell any particular financial instrument offered by Nadex. Past performance is not indicative of future results. Okay, so we got that out of the way. First thing, actually, before you go over to Apex, I want you to hop on over to Nadex.com if you don't have a demo account yet, okay? Hop over to Nadex.com. Click on Trading, Demo Trading Account, and do that right now while we're on the webinar. So you can get this set up immediately. It takes about literally 15 seconds. So I'll put the link right there for you. But again, that's under Trading, Demo Trading Account. And fill in whatever username you want. I recommend you make it short, especially if you have like an Android app, because the field's a little bit shorter on that, but because you can access Nadex on your iPhone, on your Windows phone, and if you have an Android phone. So put in your username, first name, last name that you want, phone number, and email address. Click Apply for Demo, and then you'll get a demo account. They'll send you a password in your email, so make sure it's a valid email, and you'll be able to log in here in about 15 to 60 seconds. And it's always helpful to have access to that as you're learning. You don't want to wait. It costs nothing. They'll give you a few weeks on it. They'll give you $25,000 of funny money in there. When that expires, or before it expires, if you will fund a live account with a minimum deposit of just $100, that's all it takes to fund a live account. And you'll go up here and just click Create or Open an Account for free. Go ahead and open an account. You get that live account open before even funding it. So get it open. If you put $100 in, you can do it through ACH. They're also adding in a new feature. Let me see if that one's added yet, because I know they're working on adding in some new stuff. But you can get that funded with $100, and I just want to see. Looks like they're working on it. Right now you can do ACH. I know they're about to open up debit cards. That's on the list, as long as it's tied to an actual checking account. And so that'll be a new funding feature they're going to add in, which is pretty cool. But anyway, so once they get all that up and running, then you'll have that additional. But right now you got the the e-check deposits, and $100 in, place one live trade. It doesn't matter if you put $100 in or $100,000 in. It doesn't matter if you do one contract for $3 or 50 contracts for $50. If you do at least a live trade in a funded account, then you can contact Nadex to extend your demo out so it doesn't expire on you. Okay? They'll give it a year, and then you can re-extend it, etc. You can email them. If you have any questions on how to get that done, if you don't know, if you're having a hard time getting it accomplished, just let us know over at Apex, and you'll see that we tell you exactly how to do it, or you can just ask in the forum. We'll be glad to help you out. Okay? But you ought to just, after funding and trading, at least one contract or more, then you ought to be able to just call them up or email them with your demo username and your live username, and not your password. Don't ever email your passwords. And then they ought to be able to extend that out for you for a year. Okay. So now that we have that down, next thing is hop on over, because you're going to want to learn how to trade next. Maybe some of y'all already know how. Maybe you're in the process of figuring it out. And hop over to ApexInvesting.com actually first. But .net is the login page. But ApexInvesting.com, and click on Get Free Access. Costs nothing. There are hundreds of hours of videos. There's live binary scanners and spread scanners that are 100% free. We have deviation levels that are free as well. That's basically like support resistance levels, but insanely accurate. Those are free for you to access. We have a news trading plan. We're talking about the news round, right? So you get a free access to a news trading plan. So a lot of good stuff in there. And sign up for that right now. Literally takes a matter of a few seconds to get going. Okay? And I'll just type in the domain for you so you have it. There you go, ApexInvesting.com. Now, since we're talking about news, I want you to know where the news trading plan is. Right here under news trading plan. And we go into each news announcement. You click on month. I think it's a little easier view. And there's a color code down here for what kind of trade it is. Earnings announcements to be aware of, oil inventory coming out, ADP, NFP coming out. We'll have NFP later. We're going to have Fed funds rate announcements. We have to get all those up. We're going to get those up tomorrow for you. And so lots of announcements happening this week. Big news week here, Wednesday, and a little bit on Thursday and Friday. So lots of news trades coming up. If you're new to iron condors, you'll hear me talk about those a lot. I got 3 trainings right there. If you click on it, you can actually see one where I just walk through like what a straddle is versus an iron condor. I do a whole training on an iron condor. I'm going to do another one next month. We already have it on our schedule. We're going to walk through what little tips and tricks that I've learned over the months and years of trading these. And if you don't understand spreads, like how to trade those. So there's a lot of really good videos right here to help you understand how all this works. Okay? Where is this webinar going to be? So if you want to know where the recording is going to be, just go to Education, Webinar Recordings, and Newest Webinars. That's going to be the easiest place to find it. Okay? If you click right there, it'll take you right to it. And webinars, radio show archives, Thursday morning webinars, Monday night webinars. Like we talked about binary option trading at night last week. So there's that webinar right there. So if you want to view it, you can go in there and get that information. We talked about psychology of trading, risk management. So all sorts of little videos and stuff that we've done are all posted right there under just Education, Webinars, Newest Webinars. If you're brand new to Nadex, there's a couple places I'm going to recommend that you go. Go in here under Education, check out Nadex Tutorials. And under Nadex Tutorials, you'll see Getting Started with Nadex. Obviously, start there. It's how to use the platform. It's how to sign up for an account. It's why would you trade Nadex versus something else. Why would you trade Nadex binaries versus other binaries? So I address all those questions. How to use the platform, how to use the mobile platform. Nadex spreads. So I go in there and I talk about the spreads and basics and some advanced trainings and a lot of short videos in there. Nadex binaries, same thing. And then some contract specs, like how do they move, how do they work. So again, that's under Education, Nadex. Along with that, at the exact same time, do not wait to do this because it will make it 100 times easier. If you'll listen to what I'm telling you, make it so much easier. Hop over here to our scanner. It's free to use, okay? And so we have, spread scanner, binary scanner, deviation levels, when to roll your contracts, the expiration schedule. So all that stuff is built in. It makes it really, really easy to learn how to use these contracts. And there's trainings on them. So, right here, you can go over here, you can go to spread scanner training, binary scanner training. So, that's definitely places that you're going to want to, check out and, read the forum post and things like that because it'll teach you how to actually use the scanner. It goes in, how does it work, and lays it out step by step, making the most, tips and benefits of using the scanner, the trade tracker feature, understand the results page, using filters, using the price simulator to know what a binary will be worth if the market moves. So all that's built into the course. And so you'll want to take advantage of that scanner out of the gate. It makes it so much easier. I built this not just for advanced traders, but for new traders to help them out. And like I said, that is free. So there's no reason not to start using it. It'll help you out tremendously. So many mistakes in there that you can easily make if you don't understand how to, just find the best spread or the best binary for your trade. Okay, well that knocks out some of the just where to go and get started. One other area I'm going to point out to you is the trading question forum. So if you have any kind of questions about anything, and we got a ton of posts in here, I'm going to be probably up for another hour after this replying to all these. But you can go in and we have a whole section on just general. Like, I have no idea where to post. I'm going to post there. Obviously just look at the titles. If you have a question about trading psychology or money management or, your schedule and your trading day and when you can trade and what, computers, internet access, data feeds, under structure, socialize, interact with other traders like chat rooms, trade rooms, reading the trading platforms, not just using one, but actually how do you use the different indicators and strategies on different instruments. So, what are the different strategies you can use? Like you can buy a binary, you can sell a binary, you can do it in the money and out of the money. You could do a strangle, a straddle, a double binary. There's a lot of different ways you can use them. Well, once you know what they are, once you know what an in the money or out of the money binary is, then when, how, when do I get in? When do I get out? And what do I need to be aware of? News comes out. You need to be aware of volume analysis and all that. So you can use all that and then go into scan. So under scan, okay, now that I know what strategy I'm going to do, I know when I'm going to get in, I'm going to know what I'm looking for. Now, which contract do I want to use? And that's going to come into the scanner. Ed just asked, is it free for live trading also? Yeah, you can hop right in here. You can go right to the binary scanner. Click on it. All you do at the top is there's a live and demo. Okay? And all you got to do is click on live or demo. So the scanner itself, yeah, absolutely free. You can just go in here like US yen. And if I click on a ticket, it'll open up a live ticket for me. Okay? Or if I click on demo, it'll open up a demo ticket for me. The way you can tell the difference, the number one way, and we're adding some more features back in here because they just did an upgrade on the tickets today. But right now, the easiest way to tell the difference is it says the word demo. Once we get our upgrade put back in with the new tickets, it'll just have the word demo right there. But inside the URL, you see the word demo. That's how you know you're trading demo. And inside live, then you just click that. And notice how it doesn't have the word demo in there. Right over there. See? So live ticket. All right. So that's the scanner itself. Absolutely free. Exactly. But, okay. So I just want to get y'all started. I know some of y'all are new. And I wanted to give you a place to go so you didn't feel overwhelmed because we're diving into news trading on oil inventory. And so we're not going to spend all of our time on basics of binaries. I don't mind teaching that, but I already have it done for you. And you can watch it basically, on demand. So in your own speed, you can stop, you can rewind. It's already there, it's already done. So we're going to talk about the weekly oil inventory report. Now you can do this on a lot of, some of the stuff I'm going to teach you is not just confined to the weekly oil inventory report, but I've had a lot of requests on this because it's a report that comes out every single week. Natural gas is another one that comes out every week that you could look at applying this to. Unemployment claims is another report that comes out every week that you could apply this to. And again, we have all these on our news trading plan for you. Okay? So what is the weekly oil inventory report? There's a lot of websites. We even have different plugins in our site, but I'll just show you just another one. It gets really slow whenever the news comes out, so I don't like using it when the news is actually out, but it's friendly to walk through. Right here on Wednesday, okay, at 10:30 on most Wednesdays. Now sometimes it'll be Thursday if there's a holiday on Monday, but they'll tell you. You'll know in advance, okay? And it's the inventory report of how much inventory is in storage. So it's a change in the number of barrels of crude oil held in inventory by commercial firms during the past week. So do they have more in storage or less in storage? Okay, basically it's this supply-demand idea. And it doesn't always follow it. Okay, so one thing I want to tell you first off is the number could come in worse than the expectation. Now, think about this, just for simple economics. If the expectation was, they don't even have it up yet, but if the expectation was, let's say, negative 2 million barrels, and it came in at negative 4 million barrels, that means there's less oil. So logically, not necessarily reality, but logically, what do you think if the number came in at negative 4 million with a forecast of negative 2? What would oil probably do? If there was less oil in storage, oil should, there you go, Jack got it. Good job. Cameron won. Go up. Yeah, that's the idea. Now, here's what I want to help you out on. That doesn't always happen. Okay? So don't just think if the actual number is worse than the forecasted number, that oil is going to go up. Or if the actual number is better than. Like maybe they expected negative 2 million, like they expected a decline, and it comes out at, positive 2 million barrels. Then all of a sudden oil is just going to drop. Okay? So that's the first thing is I want to help you correct that false misconception. There's a couple reasons for that. And it's actually in this report. If you go in here and you click on latest release, this will actually update live right when the report comes out. So I actually, when the oil inventory comes out, if I want to keep track of it, I'll click on this release, and then I'll just be refreshing this right into 10:30, the release time of the oil inventory report. Okay, and it'll actually be trying to refresh itself too. But what you're going to look at on the report is you're actually going to look at this section right here. That's the first number you want to look at. Okay, and notice how it says the U.S. commercial crude oil inventory. So go to the third paragraph. It's always the third paragraph. And you don't have to even do this. I'm just trying to help you first understand what is the oil inventory report. So it says commercial grade oil inventory, excluding those in strategic petroleum reserves, which it always says, decreased by 4 million barrels from the previous week. And this is last week's release. So let's look at it. And what did it say? Minus 4 million. Okay, so see how that number lines up? That's where that negative 4 comes from. Where does the forecast number come from is a bunch of economic analysis analysts. They are all polled, and they're like, what do you think it's going to be based on all the metrics that you measure out in the world, globally, etc. They put out their forecast. They're obviously wrong a lot. They're like weathermen. Okay? And they're usually wrong, which is good because that causes volatility. Whenever a number surprises the market, it causes the market to move. It's called a fundamental shock. Okay, so you want to write that down. Fundamental shock. That's whenever an actual number comes in different than the forecast. Usually you get some volatility out of that. The bigger that shock is, obviously, usually the bigger the move is. But don't think it has to happen that way. Don't think lower supply equals higher price or higher supply equals lower price because the markets are weird. A couple other things to look at. Why would it maybe be different? You go and you keep reading it. And if you just read this report, try to not get all, financial and all that. But at 371 million barrels, crude oil inventories are in the upper half of the average range for this time of year. So what they do, they're looking at the seasonal analysis. Where is oil on average at this time of year? So on July 21st, where is oil usually at? Well, okay, wait a minute. It's in the upper half. So even though it is a decline from the expectation of last week, maybe it usually declines about 4 million last week. Maybe it's usually about 371 million. It's actually a little higher in the upper half of the average range. So if you're drawing a moving average on where oil's at for this time of year, you might find that oil's maybe usually at 360 million at this time of year. So this is a little higher than average. You could go back if you really wanted to. You go back in there, you can load just a whole bunch of data, all the historical releases, like 5 years back on here. And you go, okay, well, we're going to look at the July 30th. So let's find about this time of year last year for 2013, July 31st. And actually, let's look at the report for that 23rd, because that's like looking at last week's. So let's go down here, 23rd. It's at 0, dropped down 4, but if you looked at the report, again, was it actually that much lower? Or was it what it is normally? So it's not just this forecast number, which is what everybody puts all their weight on. It's also the average range for this time of year. Okay? Do you have to know that before the report or after the report? No. But I want to let you know that this is why you may have it come in at a lower number and oil may actually go up. Because it's in the upper range for how much oil is usually there. Okay? So then it goes into more information. It goes into gasoline, distilled fuel, propane. Total commercial petroleum inventories increased by 5 million barrels this week. So that's important, that last sentence in the paragraph. So I'm basically looking at this number on the second line of the third paragraph. And then I'm looking, like, we're in the last half of the line. Is this, upper half of the range or lower half or below average? And this is really Monday morning quarterbacking. Okay, just to be right out there with you. And then commercial inventories actually went up. So even though it went down, it's in the upper half, and overall petroleum is higher than it was last week. So you get that positive and that negative number. You never know which one's going to be stronger and pull it in one direction or the other. Okay? So it's going to move so fast, you probably can't even react to the report. But that's how fast you can get it, and if you can learn to read those 3 places, those are the 3 places you're going to want to pay attention to. Now, there's some other stuff in here that you can even get into. How much, how many barrels of oil were imported, all this other stuff. But those are the 3 areas that I usually look at just to go, hey, what is it probably going to do? Now, if I go in and I pull up oil, okay, so I pull up an oil chart, and I go back to last week. Let's see here. What date was that again? The 23rd, I believe, right? Or the 18th. Okay? And so go back to the 18th. Oh, they have the 18th on there. Let's see here. Shouldn't be July 8th. Oh, that's when the week ending July 18th. Okay, so yeah, so that would be for the report that came out on the 23rd, because it's the weekly oil inventory report. So that happens for the last week, comes out on Wednesday. So let's go look at July 23rd. And let's see what we're on, July 24th. July 23rd. So right over here, look at this. It pops up. Okay, oil prices go up. But it was in the upper half of the range. And petroleum it pops down. And then it does actually end up drifting on up with the, you could say, hey, well, looking at that, okay, there's a little bit of positive news in there. It's in the upper half of the range. So that pulled it back down. But overall, oil was down. And, so it went ahead and went up. I mean, you're just Monday morning quarterbacking. You're not going to know. I mean, you had negative and positive numbers in there. Which one are you going to give all the weight to? Okay? So you could say, well, in the end, the fundamental, most important number, the negative 4 million, that one won. But it also popped up and down quite a bit on you pretty fast. I mean, that's a 40-cent move in oil. Okay, on futures, that's a $400 move. So very, very small move overall, but it's still a very big move in oil. I mean, you look at that's a big bar compared to most of the bars. Right when the report came out. Okay, so hopefully now you at least have an idea of the oil inventories. How much oil? Was there more or less oil in inventory last week than there was the week before that? That's really all there is to it. Okay? Now, one of the things you can do is you can go in and you can analyze historical stats. I do this all the time. That's how we come up with our news trades. It's how we come up with our average levels, our average volume. And there's a lot of stuff we look at. We look at history for seasonality. We also look at implied volatility for forecasting, like deviation levels. And there's all these different things that we do. But you can just look at historical stats on news reports. And it's a little bit of work. So I'll show you actually what I did, because I pulled up all the reports over the last couple of months, and we're going to walk through them. And there's different ways that you can trade it. And you can trade them using spike strikers. That's probably my favorite strategy. You could possibly do butterflies or iron condors. So you could do out of the money or in the money spike strikers. There's multiple ways, like I said, to do it. And we'll talk about even how to collect premium. So how to already be in the money when the trade starts, and ideally, be in the money when the trade finishes, when you get out of the trade. And you can do binary options and bull spreads. And the question is now, when are you going to do the trade, depending upon what strategy and what system that you use. So let's start by just pulling up some charts. All right, so what you can see right here, and let me get my, let's see, bring this back over. Pull this up here. Okay. And then, whoops, went too far. 1 second. Pull that back up. Okay. And I think I have another tool that might make this easier where I can draw on the screen for you, so you can know exactly where I'm pointing instead of just trying to follow the little arrow. So I'm going to launch that out, get that going. Get my little screen drawing tool here. And let's get a different color so you can actually see it. Okay. So 10:30. We get a pen. 1 second. Sorry about that. I just want to make it easy for you. Okay, now we got a pen. Okay, so 10:30 right here. That's when the report comes out every week. 10:30 Eastern Time. Okay? And you can see where the report came out. Now what all do I have on my chart? I'll explain that to you in a minute. But I want you to first understand that the report comes out at 10:30 Eastern Time. Okay? Why is that important? Well, it's every Wednesday except for when there's a holiday on a Monday. It's at the same time every week. Okay, natural gas is at the same time every week, except for when there's a holiday. Unemployment claims, same time every week. So some of these trades you can do very, very repetitively, okay? Not only do you have this, but once you learn this strategy, you can apply this to other news trading instruments. So I just happen to like doing an oil inventory, natural gas, and unemployment claims because they always happen at the same time every week, okay? But I just want you to get down the 10:30. So this right here, I have the date up in the top left over here, so let me show you that, okay? So we move this over. And so this is for 7/16. Let's see if we have a 7. We can also pull up the most recent one. There we go. There's 7/23. So that was the correct date, but it was just 2 weeks back. But again, it's 10:30, and again, I have the day right here. And you can tell it's oil inventory day because at 10:30 you get this big volume move. Okay? So this is 7/23. If I pull up Forex Factory over here, then you'll be able to see right there all the dates. 7/23, 7/16, 7/9, July 2nd, June 25th, June 18th, all the way down. Okay? So the first thing I did to do my stats analysis is I went through and I pulled all the different reports up. And so I got literally every day in here. There's 7/18, 7/9, 7/2, 6/25. And I even had to change up my month. Notice how I was on September right here. And then I had to go to August because that's what was trading at that point. And then after it went back a few weeks because oil rolls over every month, then I had to go to July. And then I went to June. So not only do you got to make sure you have the right contract, but you got to make sure, or the right time and the right day, but you want to make sure you have the right oil contract. So you're looking at the one that was moving. It makes it also easier to load indicators that are very specific to that time frame. So because they're measuring what's happening on that contract, its movement. Okay, does that make sense, Mike? You can get NinjaTrader where you can get oil charts. If you go into our website, the very first course is actually how to get charts and data for free. And so let me show you that because somebody's asking how to get the charts. To get oil data, like live volume data, just go into here under education. The very first course is getting started and set up. And it shows you how to get NinjaTrader free, how to get the futures data free, how to get the Forex live data, all that stuff free. So very important. Even if you're a Forex trader, you need futures data because you need to look at futures Forex volume, like 6E volume for euro dollar, 6J for dollar yen. So you can't use MetaTrader 4 for that. You actually need to get, and that's probably one of the biggest mistakes I see Forex traders make. We talked about that last week, is not having volume. They have this fake tick volume, which is what like MetaTrader 4 and stuff spits out. So you need to get real futures volume. So yes, you need futures, even if you only trade Forex, just so you can get the futures Forex volume. All right, sorry about the tangent. All right, so back on here. Let's see here. We're focusing here on 10:30 release. Looking at last week. And here's what I do. Here's the simplest trade that I do. I'm looking at a lot of things on the screen, but I want to focus in on one thing, and then I'll back out and tell you what else I'm looking at. Okay? The most important thing I look at for this specific trade setup for oil is I look at what's called spike striker. Okay? If the spike is below the market, then that's a buy. If the spike is above the market, then that's a sell. Okay? So everybody can get that down pretty easy. Now, I like to be pretty conservative on oil. You could go aggressive. I have two strategies on this. And this volume spike happens essentially when the expected volume, so if there exceeds expectations, it's higher, the actual volume is higher than the previous and post bar by a certain percent. So it's basically looking, what is there an influx in volume? Because that is often preceded by a reversal in the market. Okay? So when that volume happens, this will pop up. It actually gives an audible alert. It'll say, oil, spike striker, alert. And what I want is this happened when these three bars, so bar 1, bar 2, and then that's bar 3. Okay, because there's the spike. So as soon as that bar closed, that spike pops up. If the very next bar, okay, this is the conservative strategy. If the very next bar, if we break the high, then we have a buy. So, simple question for you. Did this bar break this bar's high? I had to wait for it to close, right? You can't break a high till you close. The high is the top of the bar. Did this bar break the high of this bar? Did it go higher than that bar? Yes or no? And I know it's a really simple question, but it's essential to actually understanding the strategy. Okay? So, it didn't happen. So, do I have a trade? So, no, I don't have a trade because it did not break the high. Would the trade have been profitable? If I would have bought pretty much any binary, would it have been profitable? It went on up, right? Okay? So it did go up. It was correct. But the conservative strategy says make it break the high. And it pays off more often than not. We have some traders who've went in and actually done a whole bunch of stats on this to see which one's better. Okay? And yes, I'm using 5-minute bars. And it's very important. It's not just volume. It's knowing what direction to go on the volume. Okay? Because you can see that, but are you buying or are you selling? So it didn't break the high. Well, I had a 10-minute one. Okay? Right here. So on 10 minutes, obviously you got, one bar right there because 2 5 minutes, and you got bar 2, and then you got bar 3. So bar 1, bar 2, bar 3. Because, right, 2 5-minute bars to make one 10-minute bar. Does that make sense? 10 minutes have to pass to make a 10-minute bar up. Did not break the low. Perfect, Christopher. Yes. So this bar did not break this bar's low. No short, and we're in the current hour. We're actually looking for, what I'm looking for on this trade is an 11 a.m. expiration. Okay? I'm not looking for a 12 o'clock. So that gives you another little piece of the clues. I'm looking for a current hour expiration on this trade. Okay? And I'm looking for it to, if it's below it, to break the high. If it's above it, to break the low. And I want the 11 o'clock. Let me clean it up for you again. So when this happened, we got a second 10-minute bar right there, and then next 10-minute bar. We can't even get 11 o'clock because by the time that bar breaks, we're going to be on the 11 o'clock is going to be over. Does that make sense? If it doesn't make sense, say so, because I can't tell you if it doesn't make sense. Okay, I can't correct it for you. All right, so it looks like everybody's good. All good, Jeff? Good. Okay, so that right there, did we have a trade? Yes or no? So, no trade. Is that okay that you don't have a trade? We all want a trade, but it's okay that you don't have a trade. Yeah. So make sure it's like, oh, there wasn't a trade. I wanted a trade this week. Okay, well, you're getting ready for a setup. You're ready. You know exactly when it's going to happen. It just didn't happen in time. Okay? How long are you having to sit here for this trade to set up? How much time of your day is this taking? At most. Yeah, probably 5 or 10 minutes. I'd say at most 30 minutes, right? Because you got the release, but technically it has to go 5 minutes after the release, right? So I'd probably want to be ready before the release happens, just to have a good idea. And the furthest the trade's going to go is to the end of the expiration. So since it happens at 10:30, it expires at 11. The most time this is going to take you is 30 minutes. Okay? And that's if you're sitting there and you're waiting for 10 minutes of it, because the 5 minutes has to go by, the next 5 minutes has to go by, so now you got 20 minutes really from entry to expiration. Now, question for you. You get into the trade, whatever it is, in the money, out of the money, we'll talk about that. Do you want to hold a trade to expiration? And this may be new if you haven't traded on Nadex. Maybe you've traded bucket shop binaries, overseas binaries. They don't let you get out. Okay, so you're on the buy and hope or the sell and hope plan. All right? No, you do not want to hold to expiration. Why would you not want to hold till expiration? Because you'll make more. If you get out early, let's say you buy it at 70, sell it at 90 or 95. Why not go for that other $5 or $10? That's a big percentage. Why not do that? Yeah, your probability of being profitable goes down because it can reverse on you, right? You basically, here's the biggest reason. You've locked in a guaranteed profit once it's profitable and you've exited. Okay, so make sure you put that whole sentence together. Got to be real careful with that word. But once you've entered and you've exited, you've now locked in the profit. The market could just as easily, and you'll see somewhere it does. We go through these examples, could go up and then pop, come right back down. Okay? So you want to lock in that profit. Now, I do this on both in the money and out of the money. So I may do both of them, I may do one, or I may do the other. Okay? Ideally, I'm not wanting to buy higher than $75. Why do you think that is? Why do you think I don't want to buy higher than 75? So some say too risky, some say the move is already made, too deep in the money, less room for movement. Yeah, you're pretty much all right, okay? if I'm going to get out of a trade, I probably get out of it if I'm doing an in the money contract, I like to get out if it hits my strike. Okay, so if it goes up and then comes back against me, I can buy at 75. And what price can I get out at? If I bought, let's just say, for instance, on here, I bought we'll just say let's just say it did break. And let's just say you bought 102.60 when it broke right here. Okay? I know it didn't, but let's just act like it did. We'll have some examples where it will. And it went back to 102.60. Approximately, what is that binary contract going to be worth? $50. Yeah, Christopher, Juan, Tim, y'all over it. Okay. So it actually doesn't mean where. Now, some person says it depends on where you're at in the hour on those binaries. It actually doesn't matter where you're at. If it comes back to where your strike is, okay, then it will be at 50. Now, there's that bid and offer. Okay, so you need to be aware of that bid offer spread. But, the mid price of the binary should be right at 50. So if I buy at $75 and I got out at somewhere around 50, I'm probably going to lose somewhere between $25 to $30 on the trade. Okay? Now, if I bought at 75, what's the most I can make if I held the trade to expiration? Not accounting for fees, but what's the most I can make if I held it all the way? So $25. Okay? Now, if I bought the thing at like 90, what's the most I can make? So $10, because every binary has a maximum value, okay? A maximum value of 100, or a minimum value of 0. Okay? So if I was buying it and it went up, I could only make $10 if I held the thing. All right? If it went against me, I could lose like 40. Now we have like a 400%, risk to reward. That's not a good balance there. If I can buy somewhere around 70, 75 or so, I may buy at 77, I may buy at 72. You got to look at where the market's at. It's not just going to go right to 75 and sit there perfectly for you. Okay, so you got to use a little bit of flexibility, but right around $75 and goes up. I want to make sure I have it at close to a 1-to-1. I know it's not going to be perfect with bid ask and all that fun stuff. You're not necessarily going to get you may maybe it'll buy the thing at 70, maybe it'll buy it at 65, maybe IVs through the roof, but you may have to get it at 75 or 77 or so. Okay. But you sort of want to have that limit. Like, I'm not going past 80. I really don't want to be at like 78, 79. So 75 is my target, give or take a couple ticks. Okay? Just trying to... Sometimes when I say like 75, people think, oh, that's the law, 75. It's like, come on. The market doesn't just tick perfectly right where you want it. All right? So, now, where is my take profit on this? If I'm not going to hold the thing to expiration, I'm not going to take the thing all the way to 100, where do I want to take profit on the trade? Is there a solid number I should always use? So, okay, I got somebody saying a 95. I got a 94 to 96. I got, or 5. Well, 5 would be on the sell first and buy second side. Yeah. Got a 92. Okay, well, there's actually, you're all right. You're close. But what I want you to do is I want you to make sure, this is a big thing that people don't do. Okay? So I want you to look at the binary price ladder. So I'm over here on the scanner, and I'm not going to choose oil right now because it's all the way till tomorrow. I guess I could. We can look at it. Okay, so we'll just look at it for fun. Let's look at this and go, okay, if I'm going to buy at, let's say, $75, I'm going to sell out. Look down the price ladder, okay? If I put in a sell at 97, would I get filled at all? If some other random trader didn't fill me, I guess the market maker that's making the quotes, are they going to fill me? No. Because do you even see a quote for 97 on the board, no matter how far oil moves? This is saying oil right now is right about 101.50, okay? If oil dropped $5, I still wouldn't get filled, or went up $5, I still wouldn't get filled for 97. There's no 97s. There's 96s. There's no 97s. Okay, so very important lesson. Don't try to get out of sell trade higher than the worst price, the highest price you see on the sell side. Okay, or don't try to get out of a sold trade where you buy back at a lower price than the lowest price you see on the buy side. Okay, that's called using the binary price ladder. Okay. Next thing I want you to understand, if you're trading volume, or if maybe this Wednesday a bunch of people decide to hop on board and trade it with you, volume is going to go significantly down. Let me show you something here. Okay? I'm going to pull up two separate contracts. I want you to look at what happens. Really important lesson on all binary trading that you do. See how there's a bid and an offer, 91.50 by 96, and look at the size, 200 contracts. Look what happens when it gets so far down that the bid offer, which is about $3.50 to $4, maybe wider, maybe $7, depending upon the contract. Okay, can they price a binary to $100? Is anybody in their right mind going to allow you to, go in and who would buy a binary at $100? You can't make a dime. Okay, so when that bid offer gets wider than the offer can go, higher than the ceiling, which is 100, and the floor, which is 0. Okay, ceiling. See how it says ceiling 100 down here? Floor is 0. There's not going to be an offer, or there's not going to be a bid. Like if we go over here and we open this one up, bring that up. I got all this. Let's get that out of the way. There we go. And let me do one more. And I'll turn off my pin program so it's not on top of everything. All right. Hold on. Put them back up there. I got PowerPoints now on top of everything. And there we go. Okay, so I want you to notice, you're not going to be able to go in and there's a $4. Somebody's not going to sell it to you for less than 0. Or, if you want to sell it for 0, great. I'll buy that from you all day long. But nobody in their right mind has any clue what they're doing. You're never going to see a 0. Actually, I believe if you try to put in a sell at 0 or buy at 100, you'll actually get an error because it won't let you do it. There's no value in the trade. So when that bid offer goes away, the size drops significantly. Okay? Could that make it harder for you to get out of your trade? If you put in a take profit at 96 and there's only 10 contracts there, and other people are doing trades, or maybe, hopefully, you're getting bigger size. Okay, this is a problem. A lot of people don't notice because they're trading 1 or 2. But, I'm sure your goal is to trade more than 1 or 2. Okay? Well, as you get there, you need to understand this rule. It's really, really essential that you get it down, because otherwise, you're going to wonder why you're getting hosed. Okay? So this is huge. It's so hard to get out if you wait for that. So how do I know where to get out on a trade? And it's not a certainty, but what I do is I look for the widest bid offer spread I can find. So this one's 5, that one's 450. Let's see, what is that? That's 450 plus 2, that's 650. Okay? So the widest one I can really see on here is $6.50. So, knowing that I'm not going to get a price higher than 100, and I probably should go ahead and knock at least like $1 off that. So let's just say 99 minus 650. What's 99 minus 650? Because the widest bid offer I had was $6.50. Yeah, 92.50. So since the bid offer is not gone, should there still be some size there? Yeah. So now if it goes down to 96 and pops back up to 93, a lot of times it has to move back up to like 85 or 15. Okay, back down to 85 or up to 15 before you see that bid offer size come back in. So don't let it go down and come back and expect it, because it may have to come back up. And it may fly back up, and now you're in the last 2 minutes of expiration, and bam. Okay. So when I said, somebody says, what do you mean by widest bid offer? I mean the difference between the offer side, the buy side, and the sell side. Subtract the difference. So like right here, 17 minus 12 is 5. 45.50 minus 52, that's $6.50. Okay, $5 right here. So just find that widest bid offer and the expiration that you're trading. Maybe take $1, maybe $2 off that, depending on how conservative you want to be, and that's probably where you're going to want to get out of the trade. Okay. Now you can wait, and you can, just like obviously don't shoot for higher or less than. That's your first rule. Don't go for 97 or 3. Okay. Your second rule is it's wiser to get out before the liquidity is, lowered. It's not gone. It's just less. Okay. But that will save you some major pain. So I've worked with some traders. I work with a lot of traders, and a lot of us trade some sizes. We'll go and we'll take out the entire book. Like we'll do all 100 contracts, 200 contracts in one trade. We really got to know that, because otherwise we're going to get totally hosed. Okay, so hopefully you're there, and I want to save you the pain before that happens. But it'll help you know a better place to take profit than just a standard rule. And this is different on every market. Like natural gas has like the widest. Okay, I mean it's absolutely insane wide usually. So about $10. Okay, and it's pretty consistent, $10 up and down. But that's just knowing that, you know, are you going to go in and do it this same trade on natural gas and try to get out at $92? Nope. Okay, so you're gonna, if you add $1 or $2, then you're probably looking at getting out at like $92, or sorry, not 92, but actually $88, right? So before that bid offer spread goes away. So if your bid ask spread was, if the widest it was 7, add $1 or $2 to that. Don't just do it at it, because remember, if your bid ask spread is $7 and it got to 93, then that's going to be a 93 and 0, or sorry, 93 and 100, and there's not going to be a 100 quote, or to be a 7 and 0. So you still need there to be a bid and an offer, which means look at that bid ask, add a couple bucks, get out before it hits it. Now it can fly through it. You know, but that's just the safest way I've learned, especially as I mean, sometimes I'm taking out big contracts, I'm doing 100, sometimes I'm just doing 10, and that's what's there. And the reason I tell you to check your expirations is because different expirations will have different bid and offer sizes depending upon liquidity. I'll have traders, somebody asked me, did you notice the bid offers were wider today? Or it really, what happens usually is you're looking at different expirations at different times, and they will vary. Sometimes they're the exact same, sometimes they're a little bit different. But like if I go over here, let's get rid of natural gas. Let's say U.S. yen. Okay, I mean that's nighttime. It's not near as liquid. Okay, there's only 10 minutes left till expiration, so it's pretty wide. It's like $13. Okay, we go down here. It's $9. Okay, that's 9 o'clock. We go down to 11 o'clock. We get on a daily. Now we're down to like 8. You know, we go down to tomorrow. You know, now we're even less than that. So I mean, it can get the more. You know, this is $5 right here. This is 7 a.m. We go down even further, you know, now it's depending upon the contract, you know, $4, $5, $6. So it depends upon what contract you're trading, how liquid it is, that'll determine how wide the bid ask is. Why is that bid ask? Why is that bid offer? By the way, I say ask and offer it's a synonym. Okay, same thing. Why does it exist? Why does it get so wide? Is it because somebody's trying to hose me? Right? That's what traders assume out of the gate. Okay, one, Nadex is not trading against you. Okay, they're an exchange. Buyers and sellers come together. Traders, market makers, which are just big traders that guarantee that they'll put a market up. Okay? And they have to make a market. And what that means is they're not there to sell when you buy and go short when you're going long. They're there to fill it. Like basically, they want to buy from you at 81, like you're a seller at 81, and they want to sell it back to somebody else who wants to buy back at 86. And they want to do it instantly. The faster they can do that, the happier they are. Okay? The more liquid a market is, tomorrow at 3 o'clock, obviously the most liquidity, okay, that's the main expiration, then tighter bid-ask spreads because they can get in and out of the trades that bid and offer really quick. They can hop in and buy from you. You're a seller at 81.50, where they bought at 81.50, they can sell to somebody else at 86.50 that, you know, they were looking to buy at 86.50, they sold back to them. So they made like $4 or $5. Now the market may fluctuate $1, $2, $3, $4, right, before they're able to get rid of it. Okay? So depending upon how liquid, how much demand is for that contract, will determine whether it's a wider or a narrower bid-ask spread. So at nighttime, there's less traders. Trading 10 minutes to go, not a lot of people sitting there. Okay, so I like trading with 10 minutes to go, but there's not a lot of people that do. So I mean, this one right here, a lot of people weren't trading the 9 o'clocks. You know, they're getting ready to go to bed or whatever. The 11 o'clocks, not a whole lot of demand, a little bit more. But so that bid offer can be a little bit wider. Also, implied volatility can impact it. So it's just really, it's a market maker saying, hey, I want to fill your order. I want to make a market for you, but I'm not looking to go broke. I'm not looking to trade against you, but I got to get rid of this thing. And I understand there may be some fluctuation. And depending upon how many traders will come in that allow me to have the chance to do that, I need more room to allow the market to move so I can get out of the trade. And we want them to make money because we want them to make markets. If they're broke, they're not going to make markets. But we don't want to, make them uber rich. So they are options. They have lower liquidity. I don't care if you're looking at CME options or if you're looking at Nadex options. I've compared them side by side, bid-ask spread side by side. They're spot on. Okay? They just have to get rid of that market. Okay? But yeah, so they have to make money to make a market. But they'll tighten that bid-ask spread up the more demand there is on a contract. So if you're ever wondering why it seems wider or narrower, It's because how much demand is happening right then. The more demand, you'll see those spreads come down. Okay? Anyway, so just it's about oil inventory, but these are little lessons that help you out as well. Okay, so we talked about entering, trying to 75 really, you see, like, if we're going to get out, like, say, 93 or whatever, that's even more important that we don't really bust that rule by more than a tick or two, okay? Because now we're talking about making, enter at 75, exit at 93, you're making $18 on the trade. So yeah, more competition as long as it's on the same exchange. When it's other exchanges, then it splits up the market makers and the liquidity doesn't help. So on the same exchange, it helps you out. Because now market makers are competing with each other. And you'll see during the day on FX and indices, you'll actually see two like consistent levels like 25 and 100 or 50 and 200. And you'll see this popping up and down, and that really brings the bid-ask spreads in when that happens. But, all right, so back on over to our chart. Nice little lesson right there on why bid offer is wider, narrower, and how to use that knowledge to know when to get out before the liquidity goes away. Okay? And knowing that so you're not on the buy and hope, sell and hope mentality. Would be a great article, right, Kelly? Note those down. Kelly's awesome. She helps me out on putting articles out on Benzinga and Yahoo Finance and all that. So on oil, we got our in the money, but we also could do out of the monies. Okay? Now, here's the thing. I don't have a lot of time till expiration. I mean, this is a 10:30 release, 10:35 at the close. The earliest I'm getting in is 10:40 or after. Okay, so I got 20 minutes to go. So if I'm going to do an out of the money, I want one that's really close, right? So let's say there was a 102... I'll try to make it easy. 102.90. Okay, so there is a. I keep trying to hit my chart buttons. I'm not used to using PowerPoints, but it was just easier for pulling all these weeks up. So let's just say there was a strike like right up here. Just it hits a tick and it's like just maybe it's $50 that you're buying it for. Maybe it's $30 you're buying it for. Okay, I'm still going to go for about $20-$25 on the trade. I'm not trying to ride this thing to infinity and beyond because now I'm at the money, out of the money. Now it has to move less against me for me to lose. Okay, if it's in them, if it's down here, I got a little room. Okay? But if I'm putting up like $50 to buy a contract, that thing can easily move against me. I can lose. If it's out of the money, it has to move now. So I'm going to go in for like $25-$30 and get out of the trade. And one of the things I've taught before is the gamma of the binary. It's how fast it goes. So at about $25, it speeds up. It gets faster and faster. It's like max speed at 50, and then it starts slowing down about 75. So you get a benefit of faster increasing speed. It starts slowing down from 75 to 100. If you ever noticed, if you buy those in the monies, it's like, come on and move. It's going so slow. But you see that 25 pop to 50 in like a heartbeat, or 50 pop to 80 with no problem. Okay? That's why. Because it's faster between 25 and basically 75, or 20 and 80, I guess would be a good way to put it. 20 and 80, you're going to have speed. The fastest in the center. It's going to slow down once it gets to those edges. That's why also I don't want to get in really much higher than 75 because I want a little bit of speed left for that thing if the market moves in my favor. Okay? And one person says, will Nadex offer more market makers in the future? Actually, they are. They actually now have 3 market makers. They used to only have 1. So they have 3, and yes, they are continuing to add on more market makers. So, which is great. So, of course, obviously to add a market maker on, a market maker wants liquidity. So as more traders come on, more market makers guaranteed are going to follow. Just because market makers go where the liquidity is, traders go where the liquidity is. So if traders come in, traders have to come first. You should have to have a market maker and traders. Once there's enough there, then some other market makers are like, hey, I went in on that action. So, anyway, so coming on in, and at night there's only 1. During the day there's like 3. So they'll be more at night, but during the day is when you'll see 2 or 3 levels in the DOM, which is the depth of market when you open a ticket, which is even easier to see now. Let's see. Let me go down to like 3 p.m. Let's see here. Click it on top. So you see that right there. If you go to depth, like during the day, you'll see depth. You'll see like more than 1 quote. Like you'll see like 25 or 30 happening right here. And a lot of times you'll see 25 by 100, 25 by 100, 100 by 25, and that's where the market makers are competing to get the orders. Okay? So look for that during the day. And let's see here. All right. So we got in the money, about 75 bucks is right around our cap, give or take a couple bucks. We got it at the money. Okay, the danger there is if it goes against us, it hits us, but we can make 25 bucks a lot faster. Okay, we got out of the money. The nice thing about that is you don't have to have a stop loss at all. If it goes against you, you can stay in the trade. If it comes back in your favor, you can still make money, and you're on the beginning point of the speed curve. So if it just gets to your strike, you can get out of the trade. My desire on an out of the money, that depends on how out of the money it is, and what the cost is. If I can buy it and make about 20 bucks and get out at 43 or 57, then that's usually, where I like to get out. So if I bought like at 20 and I could get out at 43, I'm out. If I could sell it at, say, 80 and buy back at 57, I'm out. Because that gives me that bid offer spread and then a little bit of room. I'll give myself a lot of room right there. So if it gets right to my strike, I'm out of the trade. Okay, so that's a few tips for you. Now some other things I'm looking at on the chart. I know we're spending all this time on this one chart, but we'll do a whole bunch of examples as we move forward. That's the basics. That's the ABCs. Okay, spike tracker, buy, make it break the high, break the low. You can just hop in, and you will get more trades. Like you would have been profitable in this one. Okay, but you're also opening yourself up to a lower probability trade because the momentum is not in your favor. So there's good and bad. You'll probably make a little less profit because you have to wait for it to break. You'll miss a couple trades. But you'll also miss out on, theoretically, you'll miss out on more losers because the market's at least going where, the direction that you're going. Let's see here. Okay, so moving on up there. So we got the spike tracker down. We got the time down, 10:30. We got the expiration down, 11 o'clock. Okay. What else am I looking at? All right, one thing I'm looking at is a deviation move from high to low. So we're right down here. See this deviation? I'm using what's called implied volatility, which is the expected movement built into the price of options. And so we have a whole algorithm on our servers that pulls it down. We actually put this up on our website. On the scanner, there's a deviation tab. And I'm not talking about the deviation levels specifically. I'm talking about a deviation move. And what this says is right here, right at 11 o'clock, the market moved one deviation from the low to the high of the market. And so if I go, this right here was actually a deviation move from the low to the high. Notice how it broke it by a little bit and turned right back around and went flat into the end of the day. So if I'm doing an out of the money, I want to be very aware of how close are we to a deviation move, because I don't want to do one like up here, right? Because we don't expect the market to move more than a deviation. We may get a little bit, we may not, but I don't want to expect it to move more than one expected movement of a day. Okay, it doesn't tell me if it's long or short, but if it is going to go up, basically I don't expect it to go higher than this point right here. And it popped up another like 20 ticks and came on back down, but that's okay. I'm not trying to catch the top and the bottom. That's a good way to lose. I'm just trying to catch, at best 30 to 70% of the move. Okay? The next thing I'm going to look at is the expected range. How far do I expect the market? So that's how far I expect the market to move on a day. This is how far I expect the market to move on an hour. I think that might be important if we're doing a 1 hour trade that happens on the same hour every week, same day of the week, okay, same time, same channel type thing. Definitely. Well, look at this right here. When the market moved, so it came down a little bit, so this is how far it was from the high, like say 20 ticks from the high that it pulled back. Then it starts running up, it flies up, about that line is 75% of the expected move, which it said that it should move about 50 ticks. Okay, that's what it was telling me. That little orange line is how far the market should move on this hour. Market pulls back down really quick from the high. That's this big green bar here. And then it runs right back up. And it literally went pretty much to the tick, exactly how far from low to high we said the market would move. That's very important for taking profit. Okay? You don't see the market move more than the expectation barely ever. Okay? Obviously, it's the expectation. So if the market does move the expectations, there's a good chance it's going to pull back. Now, in this case, it's the end of the hour anyway. But if that was earlier in the hour, I'm going to be really careful about, holding on to that binary contract, especially an out of the money, right? Contract much longer. If I start seeing it pull back on the in the money, I'm probably going to take my profit. Same thing on an at the money, because it's moved the expected move. And the next thing I'll look at is expected volume. Now, I had this on 5, 10, and 15 minutes because my spike trackers look at 5, 10, and 15 minutes. But I just basically want to see, is volume declining? Is it getting weaker? What's happening? And you notice you got a trend that's going up, but you got volume that's going down. And eventually, these two things are going to collide. Okay? So it's going down on 5, it's going down on 10, it's going down on 15 minutes. So when that trend line gets broken with this declining volume, it's not like the market's getting more excited about rising. We're most likely to see it turn around and shoot down. So if I saw that happening into a news announcement, I'm going to be very aware of it. I mean, we're pretty flat, which is normal, going into an expected news announcement that happens, week after week after week. Notice how the volume just sort of, there's not a whole lot happening. It's up, down, up, down. But over here, we're getting a lot of volume. It is exceeding volume. So I do have confidence that it's going up, up, up. But at the same time, I notice that the volume is declining while the market's going up. Even though it's more than is expected. This is a higher than average expected volume hour. Even though this announcement happens at the same time every hour on Wednesday, it's still more volume than normal. So that pushed the market up really far. But the volume, nevertheless, is still declining. So as soon as I see that trend line break, if I was in a trade that was going longer, this is just sort of a little advance for you, then I'd be looking for a potential reversal trade. Okay? Now, now this is jumping ahead, but other trades, because I want to show you a few different trades to use this for. One more thing on there. Yeah, I didn't go over. Sorry about that. On the expected moves, so this is expected, range high to low. This is expected range from the open to the low, expected range from the open to the high. So if the market just went straight up, how far do we expect it to go? If it just went straight down, how far do we expect it to go? That's why I like looking at this measurement, because it went down, like 20 ticks, and then it went up 50 from there. Okay? So it's basically telling me that measurement, that I got a 50 from high to low. So this is good as a channel, but this lets me know with the intra-hour movement. Okay? Now, if the market did move that expected move, what do we normally expect to happen? Well, often we expect it to go back. So we're going to look at some of those examples as we proceed. But that's just the first strategy I want to teach you, which is the spike tracker. And I'll show you actual examples where it happens as well. Okay? So, obviously, on that one, we didn't get a trade. But that's just as important to know when not to take a trade as it is when to take a trade. Okay, over here, if we go back and we look at the the spike striker, we can see this big, all this volume happening right here, lots of volume going on. We see the market shot up, and look at how it shot up to the expected range. Okay, right there, that orange level, and we see that it actually hit and peaked above it a little bit. Pardon me. We see the market's almost, not quite, almost at a deviation. And then we also get spike strikers to go short. So it spikes up. We move the expected move from low to high. Okay, that's why it's red, low to high. And so how far is it retraced from the low? And so if it's moved up that far, that's as far as we expect it to move, and it gives a spike striker, does that give you a little confidence that it might pull back? It's more likely potentially to pull back on the trade. Okay? So it does me. If I see it move the expected move, we get up there, and then I see the spikes. Volume declines like really quick. I mean, it's just like bam, 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 all the way across the board. Okay, so volume, like, it spikes and it's just done. All right? And then it breaks this low. So now do we have a short trade? Yep, we got a short trade. It broke the low. I can do an out of the money, like say at 101. Take my profit when it gets there, right? Remember I said go in at 25 bucks. Don't expect this thing just to stay down. Or I could have done a little bit higher. I could have done like a 101.20, 101.40 in the money. Okay? So there's a few different strikes there that I can take advantage of. And I have volume dropping. I have expected movement happen. I have a lot telling me, I'm like right at the deviation. I have a lot telling me that there's a good chance we got a short, and then I get the spike striker, and then I get the price break. That's a trade I really like, that setup. It follows up with all my rules, and so my system rules, which is spike striker, break low, go short. Okay, cool. But it also gives me the style confirmation of volumes declining, expected ranges move for the hour, we're near the expected movement on the day to go short. So very simple trade, but you can see there's a lot telling me what's going on. I mean, it's not that you can just do this during news hours. I mean, obviously, here's spikes right here that went short. Here's spikes right here that went long. They're all over the place. This one never got triggered. This one, yep, there's a spike right there that went short. So that spike never got triggered to go long. So these are happening throughout the day. They're not just during news, but and I didn't even do this to do it on news. I just started noticing it as we traded it more and more and more every day as we traded the spike striker strategy, how well it seemed to work on news, and if nothing else, one more confirmation. Now, something else you can do is you can look up here and maybe as it starts moving up, you could sell outside the range. Okay, or you could buy below the range. So if it's moving up and down, so if it gets close, you can just hop in and do that and not wait on the spike. Because you don't really expect it to go more than the range. It will do that, but you could expect it to go more than the range. You don't expect it to go more than the expected range. So if I can get in here and I can sell like maybe up here for $30 or 20 bucks or not 30 but but 25, or I could buy like for 75 and just have a pending order in there and it pops down and pops up. It might get me on both sides. Now I have a butterfly and I can just set that order at these levels. So right there I just look at draw my little line right across, and I could have a pending sell and a pending buy. And now instead of to wait on the spike striker, I can still hop in. But I'm doing it outside. This is actually what's known as the classic boomerang strategy. It's just at news. A lot of people haven't thought about applying this during the news. So you could apply the classic boomerang on the oil. Now, this is not just any news announcement. This is news announcements that happen at the same time every week. Okay? So classic boomerang, but not just on news, but on the same time every week. And just putting in those orders. NFP is not the same time every week. So I would not do it on NFP. I would not do it on FOMC. So it's at the same time every time it happens, but it's once a month on like the last Friday or whatever of the month. So would not recommend doing it on FP or FOMC. Now what I'm talking about is the Boomerang Classic. All right. Now as far as the spike striker, yes, but I would be what I would caution you is make sure that you're definitely looking at the the conservative entry only. So make it break that low, make it break that high. Okay? Don't just hop in if it hasn't broken. And obviously on everything I'm telling you, demo it. I'm not giving you trading advice. I'm teaching you like things that I see. This is what I see in the market. These are things that help me. You have to make your own decisions. But, hop in there, demo to begin with. Don't be in such a hurry to be there in 12 days that you're not here in 12 months, But, so same time every week, classic boomerang. Now, any news announcement, NFP, FOMC, GDP, PMI, CPI, on down the list, you can do the strategy on it. So, because you'll see this. You see this all the time. You don't even notice you see it, but the market will fly up and then it'll pull back. And if you look at the volume, you'll notice that it had a lot of volume right when it flew up, and then the volume died off. You'll also notice that very often when it pulls back, here's another little hint for you, is it usually pulls back. How much do you think it usually pulls back? We'll throw that out there so you can get it. How much do you think the market will pull back usually after a news announcement where it flies up that fast? Like what percent? And this is like used on Gann, Fibonacci, golden ratio, like everything. Harold, you're the first one to get it. Yep, Dozy, 50%. So the market usually pulls back about 50% when there's a big spike. So that might also help you in picking an out-of-the-money binary, right? So, because you could look at that, you could look at deviation levels, look at expected moves, but you could also look at, what would a 50% retracement be? That's something you can use on that to help you pick that contract. Like, I don't expect it to go any further, but I expect to pull back about 50%. When we get that short, we got the short confirmation. Okay, I'm going for this contract. Yeah, there's one here. I like the price better, but I don't expect more than 50% retracement, so I'm going for that one. And I'm only going to risk $30. I'm not going to have a stop loss. I'm going to, whatever, or $25 or $20. Obviously, the cheaper you can get out of the money, the better, as long as you don't get it far away. If you get too far away, it's not going to help you. And what is too far away? It's not knowing why you're picking the strike you like, except for the price that the binary is. Like, it needs to go, why do I think it's going to hit that binary's strike price? Not, I like the risk on this one. Okay, I like that it's $15. That's not a good reason to pick an out-of-the-money binary. Do you have a reason, an expectation that it would actually move to that price point? And not a hope, not a desire, but a consistent expectation of something you've seen over and over and over again in the markets. Okay? And I'm speaking from my own experience. I'm speaking from just mistakes I've seen other traders make. Okay, so right there, So we had a no trade. We had a 5-minute that triggered. We have, let's see, a 10-minute that triggered. That one as well. So you could have layered up right there, right? We could have went short here, and then we could have went short right here. Now, if it moved down that 50%, probably don't want to do that out of the money on that 10-minute one. Now, I'm not saying you can't do it out of the money on 10-minute ones, but it's already moving in our favor. Okay? So it's like, it's not going to move that much. So we're probably going to focusing more on the in the money, right? If it's already been moving in our favor for the full 10 minutes after that spike alert went off. So again, what is my target? That'll help me pick whether I want an in the money or out of the money. Now, I may go in there and I may do what's called a double binary. I may go and I may sell, a binary here, and I may also sell a binary here. And if it goes down but doesn't hit my strike but stays below it, let's say I sold that one for, $25. And let's say I sold that one for $75. Okay? Well, I made, say 20, 25 here, lost 20, 25 here. I'm pretty much break even. If I hit both, then, hey, you know what? I made $50. If it flew down, came up, and I got out at 50, so I lost like $25 here, but then it came back down, then I could actually make that 25 back. So that's called a double binary. We have a video on that on our website. Search double binary. But basically, it's just doing an in the money to cover your out of the money if it doesn't go far enough for your out of the money, and it's doing an out of the money to cover the in the money in case it hits your in the money, knocks you out, and then comes back in your favor. So it's basically a $50 risk reward trade, and with potentially a break even if one profits and the other one doesn't. So that's a pretty cool way to do it. You type a little more capital doing it though. Like you'll type $100 say instead of just 50, or instead of 75. Okay. I'm just trying to give you a lot of little tips and tricks on trading oil and just stretch your mind a little bit on different ways to take advantage of it. Okay, so we got another day here. Let's see how this one goes. These are oil inventory Wednesdays. Okay, it's pretty obvious when you look at the volume and the dates up here at the top. Okay, but anyway, so spike tracker flies off right there. 5 minutes. Okay, it breaks the high. Do we have a trade? Yes, this one went back more than 50%. It went back almost a full 100%. So, but seeing how it already went we don't see a big retracement. Probably not a big out of the money fan on that one. Do you see how we've already went back half the amount by the time we get in? Okay. So, but anyway, so right there, moving on up. It's already halfway up. I don't want an out of the money if it's already halfway. Made a retracement, right? I want an in the money, maybe an at the money, but I'm probably going to prefer an in the money because I don't expect a whole lot more movement. And at the money is probably going to leave me right on the edge. I'm going to be biting my nails to the end. Out of the money, I'm just going to watch my money go away, decay probably. Okay? Okay, so looking at that one, let's see. We can go back another day here, another week, and we got 5 minutes. We got our announcement, popped on out. Volume's dropping down, down, down like normal. Not quite at the deviation. We obviously hit the expectation on high to low. I mean, there's open to high. Okay. And we got a spike of 5:10:15. Well, that would have put us at 5:10:15. It's at the end of the hour. Do we have a trade for the 11 o'clock expiration on Spike Striker? Do we have it? Can you get a trade where it's already past expiration? So the answer is no. So if we go 5:10:15 and it's 5:10:15, then it's going to start for 12 o'clock. Like the entry would be in the 12 to 12:05 time frame. So there's no trade, and that's okay. You got to be okay with that. Otherwise, you're going to force trades. You're going to be frustrated. You're like, I'm going to make this happen. You know what? If you're patient, got a 5-minute one popping up after that. You got other. There's a 10-minute. That was a great trade right there. So I mean, there's trades all over. There's 5 minutes. I mean, there's tons of trades. Go back to that last trade. So it says that move 50%. Do you get in? Yes. I just don't want to get in an out of the money trade because remember a lot of times it only retraces like half. So I don't expect it to keep moving really far. So I'd be more inclined to choose an in the money binary when it's already moved back 50%. I could use a in the money. I don't really like the at the money is going to put me on edge. The out of the money, I'm really asking just to let the time decay eat up all my money. Does that make sense, Christopher? Or Kelly? Oh, that's Kelly. Sorry. In the money strikes are consistently priced the same way. We're working on putting something in here, but if you go on Nadex, I'll show you this. What they do is they set them 10 minutes. They're about to change it to 5, but before the binary actually starts trading. So if we go to, say, like commodities, so markets, commodities on Nadex.com, click on contract specs, and then scroll on down to energy, scroll on down to crude oil, then find the binaries for crude, look at the intradays, they're 20 ticks wide. Okay, so 0.20 really. There's 9 of them. So they'll be 20 ticks wide. And so that's how you know. They're going to be every 20 ticks. From, if it's an 11 a.m. expiration, basically 10 minutes before 9 is when they set the strikes. Like I said, they're going to be bumping that to 5, which I'm excited about. Gave a lot of suggestions and they listened, so which is awesome. And then basically they'll set one like right there, and then every 20 ticks up, every 20 ticks down. Another cool thing for you nighttime traders out there that they just posted up is they're going to be expanding their market, not their markets, but they're going to go from 9 to 15 strikes on like dollar CAD, dollar yen, or not dollar yen, dollar CAD, dollar franc, euro dollar, and Aussie dollar. So more strikes and tighter strikes. So like 4, I think I want to say it's 4 wide on dollar CAD, dollar franc, and euro dollar, 5 wide on Aussie dollar. And that starts up like August, I think 11th. So they posted that on their public notices page. And so anyways, a lot of cool stuff coming, and we'll have a lot more strikes to trade with, a lot better premium. And anyways, they're listening, and they're helping us out as we're asking them for things, so it's really, really cool. Anyway, so right here, we got, and yeah, that's on the notices page on Nadex. So we got this one popped up, and already up half, and yeah, so we already went through that. This one, we did not get an entry. So I really want you to see when there's not an entry, because that's probably one of the biggest mistakes I see traders make, is they force a trade that wasn't there. And you got 5, 10, 15. Okay, so it's going to be 5, 10, 15, because it takes 3 5-minute bars to make one 15-minute bar. So this is when the alert's going to pop up at the end of this bar. Well, the 11 o'clock expiration is done. So no trade, which is okay. We can go over here. We can look at this one. We got a new hour. Let's see. There's some trades, but none during the 10 to 11. So right here, here's a good example of why you want to take profits and that whole 50% idea. So we've flown down, flown up. We got a 5-minute one right there. We got a 5-minute spike striker. Okay? It breaks the high. But look at this. I mean, we're, from that new spike, we're about 50% back up. Not like in the monies, okay? Or out of the monies. It moved about maybe 20 more cents. If I got that in the money, right, let's see, if the market's right here, what are we at? That's probably, okay, that's 80. So you probably have an 80 there, and then you got a 60 down here, and then you got a 106. So 20 wide each. So you got at the money, in the money, and out of the money. Obviously, if you're in the money, you're golden. And now remember what I said about if it pops down or up? Like right before the news, you could put in a buy-in right here, and you could put a sell-in right up here at the top. Okay, it's a limit order, just working order. It pops down, pop, fills you, turns around, and there's your boomerang trade. Done in, and and it pops up, you definitely took profit. Spike striker, you went in, hopefully you took your $20 profit. If you didn't take it, it came back down. Depending upon if you were at 105.60 or 105.80 would determine whether you won or lost. So it would have been very important to have taken that profit. And that shows that boomerang coming out. Now you can try doing butterflies at the top of the hour. You can even do 2-hour binaries. You can just set the ranges to 2 hours. And the expected ranges, just right click, go to indicator, choose 120 minutes instead of 60. And so you can try to get in before them. You can try, that's as early as the 11 o'clock can expire. So you can even look at the end of day if you wanted to. I think that'd be a little nuts. The earliest I'd get in the trade would be 9 for an 11. But you can say it stays well within the range. So if you can get a good binary butterfly, that might be something you could look at. I like trading right off the event. So I'll either do like the boomerang, classic boomerangs, and or I'll do the spike strikers right off of them. Okay? So would the in the money profited? If I pulled up the exact, I'd have to load up an August chart so I could plot the strikes on there for you. But if it was 105.60, yes. The at the money was 105.80, and the in the money was 106. So yes, 105.60 would have profited. So it would have made you very nervous, but it would have profited. So because it came down like right in the last 5 minutes. So if I'm doing an out of the money, that'd be like a buy for like 15, 20, 25, 30. I mean, I don't care what the price is. I mean, I want it, as cheap as possible. Probably don't want it for more than about 30, 35 if I'm going to try to take profit in 20 bucks. But I'm getting, basically, if it's more than $35, I'm getting closer to an at the money contract. It's not a bad thing, just be aware of it. But I don't know if that helps answer your question, Chris. But I sell for 30 and buy for 70 or 75 or whatever. That's in the monies. Okay. For a classic butterfly, I'll actually do 15 and 85. So if you watch my butterfly ones, I'll go in and I'll do a 15 and 85 because if I make 15, basically 10 on one side, and I lose 35 on another, I lost $25 and I can make 30 on the trade. So I'm actually looking for 15 and 85s on usually on butterflies. It makes them wider, gives me a better probability, and it gives me a great risk-reward scenario. So, yes. No. Okay, that's if you're doing a butterfly. A butterfly would not be legging into it. A butterfly is at the top of the hour. Immediately at the top of the hour, I put on, I go in. If it's not there, I don't take it. Okay? So butterfly would be, okay, I'll buy this for 15 and I'll sell this for 85, and that means I can get filled at both of them at once. You don't want to do a butterfly on one side and not get filled on the other side. So I'm glad you asked the question. But yeah, so that'd be at the exact same time, top of the hour, getting in at 1585. Now if I'm doing a classic boomerang, then yes, I would do like a buy at 70, sell at 30. You had buy at 30, so you're talking out of the money. I'm talking in the money. Okay? So I'd buy like the strike down here or right down here for like $70 at the top of the hour. And I'd sell the one up here for $30 at the top. I'm not going to get filled on it. I mean, it'd be nice, but was that right? Yeah, 30. Yeah, sell 70. All the chicken scratch on here. Buy. Okay, so it pops down. It fills me really quick before I even get a chance, and then flies right back up. As soon as that gets filled, then I'm going to go in and put my order in for 90, 92, 93, 95. Whatever makes sense based on what's coming out. So, nope. So, let's see. Question is, do you have a written thing of double? I have videos. I have courses that teach you. So you have to watch the videos. So, I mean, this is hundreds of hours of me studying markets and figuring out how to do them. So the quick reference guide is the videos. I've made the shortcut as short as I can make it for you. But it does take some time. And my recommendation would be don't try to master. I think this is probably one of the biggest mistakes I also see traders make is trying to master 20 strategies. Just focus on the in the monies. Either is or isn't an in the money. Then focus on the out of the monies. Okay? And then focus on the at the monies. And once you get one down in live, trade that in live and trade the other one in demo. And then work on adding in butterflies. And then working on doing in both and doing double binaries. But yeah, don't try to do everything at once. Because you hop on these webinars and it's an advanced webinar where I'm teaching you all these different ways to trade. Some of y'all are brand new and you don't even know how a binary works. Some of you are starting to get an idea and man, you want to know. You feel like you need to know everything to do anything, and that's not accurate. Because if you try to do that, you won't know anything. Like you'll be a jack of all trades, good at none. And so just focus and then add plays to your playbook. Okay. This is one of those videos that's meant to be watched a few times. So it's going to be. That's why it's recorded. That's why it's archived for you. Okay. All right, so here we got another one. Let's see. We went back. Make sure I went back. Yep. All right, so we got another one right here. We got a 10 and a 15. So 5, 10. Breaks out right there. This trade probably lost. I mean, it depends on what you're in the money. I mean, if you had 104.60, it went right to it and expired. If you had an at the money or an out of the money, the trade lost. But we were already halfway back. That's why I said don't do out of the monies and be real careful in the monies when, the movement from here to here. Let's see, click that again. So we went down, we went up, and we're back at like half. Okay? then don't do those in the monies and be real. I mean, don't do those out of the monies and be real careful on those at the money because it'll probably finish really tight. So the in the money 104.60. I mean, you basically would have just by a hair been profitable on the trade. So that 50% rule, you can see how that's coming in and helping out where it came from. All right, so going back, looking. I mean, we're looking at months of this. So I want you to see it's not just like one trade. All right, so here we got 10:32:11. All right, so we got a short one first. The 5-minute came first. Obviously, the 15-minute came after that because you got a 5, 10, 15. You can see where the 15 minutes happen because there's the 5, 10, and 15 on the expected range. That's why I like the spike striker template. Anyway, does it break the low? Yes. Does it end down? Yes. Did it move down far enough to take profit? Yeah, it moved down to like 103.20. That would have been out of the money. You got 103.40. It's in the money. That would have taken profit and expired in the money. And then 103.60 also would have obviously expired in the money and taken profit. Out of the money would not have been profitable if you did not take profit. And people get really greedy because you're buying for 20, you're selling for 80, and you can make $80. It's like no. Like if you want to get real good at magnet pricing, that's where you go for like those $80 trades. Okay, but you got to be willing to lose like half of them. But on these, I mean, you're going for 20. You're going for base hits again and again and again and again. All right. If you have $1,000 and you pull off $50 in a day, that's a 5% return. You do that every day. I'm not saying you will. I'm not even implying that you will. But if you did that every day, that's a 100% return on your account. You doubled your account, and that's just making $50 on 1,000. You don't need that many $20 trades to hit that. Okay. So don't get too greedy there. Anyways, we have a whole money management section where we talk about different ways, different methods on managing risk, and most importantly, profit. Because I think that's probably the number one mistake I see binary traders make. There's a lot of number one mistakes, aren't there? One of the top mistakes I see them make is they'll go in and at best they'll manage their risk, but they won't take profits. Okay, so we see that one worked out well. That's nice. And these aren't cherry picked. I mean, this is every week. Okay. I'm not even trying to. I'm just trying to get you. I don't care what method you use. I just want you to see, how do I design a system? So 10 to 11, we don't have a trade. Just nobody cared. The oil inventory came out, and that does happen. Sometimes it's just like, really, did the release even come out? Yep, it came out, and nothing happened. Okay, so here we go. Here's another one. Now we're back at like 521. Just going back and trying to do a bunch of these for you. We got 10 to 11. And, okay, so we get a 10-minute spike. So 5, 10, breaks the high. It obviously expires up. It ran up about 15, 20 ticks right there. It ran up to 103.40, which would have been your out of the money. So as long as you took profit, it would have been profitable. It came back down, would have been on the line. I don't know if it would have expired in or out of the money on that one. If you would have held it. 103.20 obviously expired in the money at the money, and then 103, the in the money, was also profitable. Using that strategy. And let's see what we got. We have 514. I think we're about done. I only grabbed 2 or 3 months here. Showed you July, showed you June. This is May, so 514. There's our release right there. And we got a spike. Spike was below the market, so therefore that's a buy. If this breaks that bar's high, it does. We go long. 102.60 is you're out of the money. 102.40 is you're at the money. 102.20 is you're in the money. So as long as you took profit on your out of the money, you hear that consistency of me saying that again and again, was profitable. In the money, made money, but made you nervous because it came back down and back up right at expiration. In the money, obviously, won by a mile. Let's see here. All right. For different tips on that questions, where can you find stuff like on money management, stewardship? Obviously, none of that is advice. It's just, I show you like Kelly's ratio. I show you my method. I show you like a few different methods. That's under steward. So if you just go over there and go to capital management, that'll show you some ideas. Spreads, futures. It's also binaries. I don't know why we don't have binaries on there, but you can also use it on binaries. And 3 money management. There you go. That's actually it. I went through the detailed example of this, but this is three measurements: Kelly's ratio, fixed ratio, and then the M3 ratio that I use. And then here's a video I did on it last Thursday, right there, managing risk with spreads and futures. How can you become a market maker? I think the minimum deposit requirement is $250,000. Okay. And God, where is it at now? I used to know where it was. I think it's under About Us. Well, I can tell you right now, it's on here somewhere because it has all the contracts and everything. But you can just call them up and they'll send you the contract. But as long as you have the basic technology to do it, you know how to price your own binaries, you have the ability to fund it, and you have the algos to automate the pricing. So you can make a market, which means that you are guaranteeing that you will put markets up and down on the price ladder. And you can choose the specific markets you want. If you can do all that, then contact Nadex. They'll be happy to let you do so. But Keith, we are working on writing out specs on everything, but we got strategy specs, system specs, so we're constantly adding to stuff. I know there's a whole lot of information, and I got literally 4 people who their entire goal is making simpler and simpler and simpler content and more bite-sized pieces, and making everything more and more full. It's grown so fast. We have like 7,300 traders now, and just the content just keeps coming out, and we're finally getting it organized with the forum and everything. So we'll constantly work on trying to make it easier for you. But if you're lost on anything, just ask in the forum, and we'll be glad to help you. Okay, and like lay it out or point you to the right video or write a simple explanation out or whatever. I'm trying to see if there's any questions I missed. Going up the list here. Yeah, the ag waived. You can do it on that. Better have your take profit set on the ag report, because that thing, the big one, there's the little ones and there's the big ones. The big ones, I mean, they pop back up and then they pop back down. So be quick to take your profits on if you're trading the ag news releases. Let's see here. Expected volume, deviations. Deviations are free on the website. So we have trials and everything, Tim, so you can check that out. Thinkorswim has a lot of limitations. They don't have true tick quoting. And so a lot of our stuff you can't do unless you have true tick quoting. They have what's called snapshot quoting on Thinkorswim. I love the platform. I use it all the time for regular option trading. There's a lot of cool tools in it, but there are certain things it can't do. So otherwise we would have it developed in there. Let's see here. And to me, I mean, I have it open right now, just so you know. I mean, like, I really do use it all the time. It's on my show. I bring it. You'll see me bring it up on my show every day. And I look at eSignal, I look at Ninja Trader, I look at Thinkorswim. And to me, it's what does it do? Like, if I want to do what's called future spreads, seasonal spreads, not Nadex spreads, but seasonal spread analysis. There's certain things that eSignal can do that no other platform can do. I'll use it for that. If I need to build tick-based bars and do a lot of like high-tech custom stuff, I use Ninja. If I want to do option analysis and every which way from Sunday, I'll use Thinkorswim. So to me, it's just like downloading another app on your computer. It's what is going to help me get to where I want to go. It doesn't mean that I throw everything else that I have, because I have TOS open right now. It's what's going to help me get to where I want to go, and I'll use whatever combination I need to, because I'm here to make money, not be comfortable with my platform. I hope that makes sense, and I don't even mean that to be harsh. I just, I've used probably 40 platforms, and there's about 5 different ones that have unique advantages, depending upon what kind of thing you're trading in the world. And so I'll use any platform I can use if it has a unique advantage that I can't get anywhere else. Then I'll add that to my list, especially if I can get the platform for free. Let's see here, going through. I think I got every question. I'm scrolling up. Had a lot of questions and a lot of great interaction today. I appreciate that. Let's see, going. So yeah, you can take 5, 10, or 15 minutes. It's not just the 10. It's not just the 15. Obviously, though, if it's at the end of the hour, you've got minutes left to go. So you're probably going to be in the money if it's at the end of the hour. Let's go back to the bottom. Let's see, Tom. What do you got? I'm trying to find your. He said, "Please answer." Oh, okay. We have a discounted chart. I can't really go into sales on this. I'm not here for sales, so this is a Nadex education webinar. So that's why I don't really go into that. But you can try it out for a couple weeks. But the Apex Investing membership is free. So maybe that's what you're asking too. I'm not sure. But if you go to ApexInvesting.com, you get access to it's free. So just hop on there, you click get free access, and you'll immediately, this is a free member account I'm logged in as. So you can go right here, you can use the binary scanner, you can use the spread scanner, you can get access to deviation levels, the other tools, you get access to the questions, the forum. So you get access to all the educational videos. So I don't charge anybody for a dime for education, or the scanner costs me quite a bit. So I mean, it's $3 to $5 grand a month just for data fees. But all that's free. So, and also the news plan is free. So deviations, news plan, binary, spread scanner, all education, trading forum. So quite a bit. You can go to either one. So .net's the login page. If you go to apexinvesting.net directly, then you just got to click on the, if I'm logged out, got to click on the not registered sign up here. And that'll take you to the free sign up form. Just fill that out and you're in. So, or if you're on the main page, just click on the big get free access button. So, but the basic one is free. And that comes with, the basic is not very basic. So, let's see here. You bet, no problem. I just try to make sure, the educational webinars are, I'm not a big salesperson, so you'll notice you won't see me do a lot of talking about memberships. I'm check it out. If you find something you like, awesome. If not, just, I hope we've helped you, and we have a lot of people that are free members that just contribute to the community, so which is cool. It's just traders helping traders focus. And then, yeah, you can do a cover spread. I don't know, Dozy, I'm not quite sure what you mean. Am I going to cover spread today? I talked about bid-ask spread. I talked about how you can do iron condors as well at the beginning of the webinar. You've got to calculate your risk-reward on the trade. Look at where your break-even is. And it'd be doing the exact same principles I taught you today. So you go in here and you'd look at doing an iron condor and you'd buy the lower spread, you'd sell the upper spread, you'd look at your max profit and you go, okay, how far up can it move that I'm break even? How far down can it move that I'm break even? And you'd be surprised how often that works really well. Let's see here. Let me show you an example. And essentially, and now we have a whole webinar we're going to do on iron condors. Okay, so I'm not going into detail on this because it'll make this webinar last forever. We're already at an hour and 15 minutes. So, which I don't mind, but I know some of y'all get a little perturbed. Anyways, so right down here, basically right there, and it's not very lined up, but right there, that'd be an iron condor. It can make $68. Max profit, that's the max on this one and the max on that one. Like I said, it's not lined up. I usually like to be more in the center. But you could look at that, say, I put 9 to 11 ranges. You want to make sure that range is there. But that basically means that the market can move up or down. Let's see, what would it be if it was... It could move down 70 pips. 78 pips. Yeah, because we have to move down 8 pips from where it was. Basically move down 78 pips and be profitable. Move up 78 pips. But it's a massive topic, and so I need to lay the math out, or it's just going to confuse everybody. So for what I suggest right now, while you're waiting on that, is to go to the Nukes trading plan, go over here to where it says Iron Condors, okay, and watch all these videos because they're going to get you up to speed on it. And then, like I said, we have already scheduled an Iron Condor webinar. And I'm actually going to release a new tool. It'll be free. Because the new trading plan that you'll be able to check out. And it'll make it where you can type in your numbers and easily find out whether a condor, is acceptable or not. Like basically at what point would be break even. It's really not that hard. It's if you make $20 below by buying 20 ticks below the market, and you make 20 ticks by selling 20 ticks above the market, the most you can make is 40 ticks. The market moves up 20 ticks, then you're break even on the one you sold, and you made 20 on the one you bought. If it moves up 40 ticks, you've lost 20 on the one you sold, you made 20 on the one you bought, you're break even. So you can move up 40 ticks or down 40 ticks and be break even. Give you an 80 tick range. And then it could move literally another 40 ticks from there. So if it moved up 20, you're up 20. If it moved 40, it could move 40 more. So it could move up 80 or down 80, and you'd be at 1-to-1 max profit to 1-to-1 risk, and that gives you a 160 pip range. And so it's an insanely awesome trade. That's why you'll see a lot more green on this. The orange is like just be aware stuff. As far as trades, you don't see a whole lot of straddles. You don't see a whole lot of strangles because it has to be a big, consistent mover for me to do a straddle or strangle. It's really rare. I rarely ever do strangles anymore. I used to do them, but I learned better. It didn't move enough. The strangle had the price built in. The straddle had the price built in. Well, you know what? That means why not go ahead and just do the opposite, and I'll collect premium on it. So if I'm going to hop in and do a range-bound trade, I'm going to be doing an Iron Condor. Could do a butterfly, but I prefer Iron Condors. You'll rarely see me ever do a butterfly if I can pull an Iron Condor off. So... no comments on the new tickets yet. I've barely used them myself. So, I mean, you got buy, you got sell. So it's highlighted that. Just make sure, the color's there. Just make sure you're really paying attention to the direction because it can be real easy to submit it, I think. You got your price. So you probably want to go ahead and reset your default setting if you don't know how to do that. Where you can make it automatically pop up the quantity inside of it. You can check out depth, which is a cool add-on, and you can only see top layer or depth, so you can see all of it at once, which is I like that. So you don't really need top. It's just if you want less information, you choose top. If you want to see everything, you choose depth. And some people are like, I don't need 2 tabs. Just put it. Just only show me this. But some people are like so new. They're like, just show me the top layer. I don't care. So I would probably be personally sitting on the depth tab if I was using their tickets. So yeah, we'll add in some of our features back in. These just came out, so give us like a day or two, and they'll be good to go. Yeah, it's easy to do the opposite of what you intend to do. So it's like click, make sure, double check, then place. I don't believe they set it to stay on depth. It just pops up to that. So maybe we can do that in an upgrade ourselves on ours. But yeah, it's like it's annoying to have to always click. So, let's see here. But yeah, don't have a whole lot of comments on them because literally, y'all got them as soon as I did. They came out Friday, and so they've been Friday, Sunday, today. And we just been working on integration. We got it integrated. It's working now with the scanner, and so you can open up the tickets off of it. So now we're going to add in the other fun stuff we don't modify the ticket. The ticket stays the same. Just don't ever mess with that. Let's see. Yeah, you can highlight the price and change it. So see, like I can change to 56, 61.50. That's there. So that feature's still built in. You can go up or down. Huh, that's annoying. Yeah, that's an error. Not mine, but yep. Yeah, turn that in, Kelly. I basically say that you're not able to. And anytime you see an error, I mean, they are good about responding. See, now I can type no problem, but like, so Kelly, yeah, good job on finding that. If I click here and then go back, it's like once it's edited, it's easy to edit. So it's just on the initial load. So yeah. But yeah, I can do everything on it now once I've edited it. Yeah, whatever that exact error is, turn that in. If you ever see anything, and just let them know. Just call them and be like, hey, this isn't working. I used the My Account tab. I can't speak on behalf of Nadex, but from everything I know, no, it won't affect the mobile app platform. It's totally separate. So I think, I don't even know what the goal of the new ticket was. I think it was just, I don't know. Just another look and fill. But okay, well, all right. So to wrap up, real quick, if you haven't got your live demo account, hop on Nadex.com. Visit us more at ApexInvesting.com to learn more about how to trade on Nadex. And we'll get this webinar up under Education Newest Webinars. Okay, recording under Webinar Recordings Newest Webinars. So you'll be able to access it and let us know what you're looking for. This webinar is a big compilation of a lot of requests. So glad y'all enjoyed it. Thank you. Y'all have a good night.